Hey, good morning, everybody. Welcome to Friday, December 11th. I hope your week's been good and you're ready for some downtime over this next weekend. Yesterday was a little bit of a mixed day. I'm sure Dave will have something to say about that today. Not looking so good. And we'll talk about some of the reasons maybe why that is happening. So stay tuned. But remember this before we get into Dave. There's only one thing that you can control within your portfolio, and that's risk. And the question I have for you today is, do you know exactly how much risk you have in your portfolio on a scale of 1 to 100? If you can't answer that question, you need to give us a call at 863-382-0037 to schedule your financial x-ray. I'm looking forward to today's conversation with Dave, and that will be next.
7 Highland morning. All it's 8:41 here, 19 now before 9. Well, let's see here. We've got 1 foot into the approval process now to get us a COVID-19 vaccine. Things are looking good over in Europe because, well, their vaccine appears to be working over there, so the same stuff over here ought to look good. What on earth could possibly go wrong on the financial markets? Oh, politicians. Well, that's a piece of it this morning. Let's go downtown and check on your money. From Statler Financial Services, Phillip Statler's on the line. Phillip, if everything else goes right, you can pretty well count on a politician to muck it up, can't you?
Yeah, they're doing their best and they're succeeding so far, and that's what the guys on Wall Street are thinking too.
Yeah, that's pretty much getting the credit, I understand, for kind of a mixed bag on Wall Street yesterday. In order to set the table, NASDAQ was up by a decent amount. I think that's another closing record, but the Dow and the S&P were both off, not by a lot, but by around 0.25%. It was off, and in the face of good news on the COVID-19 front, I would have expected it to be a skyrocketing up day. Then we get to the point of Congress. The House of Representatives has put through a stimulus bill that's not as big as some want, not as small as some want. President says he likes it, he'll sign it. And the friends in the Senate are saying, yep, which is just going to end up putting us in a financial funk for the day, I gather, huh?
It's definitely putting some pressure on everything this morning, Dave, and they just cannot get their act together. I thought the whole idea in Congress was give and take, and I'm not seeing give and take on either side, and that's problematic with the bills they're trying to get passed right now. And so because there seems to be no compromise on either side of the aisle, and believe me, I think both of them need to compromise to get this done and move on from there. But they're not able to do it, and I'm not so sure that they will before they recess for Christmas.
And that's the issue, because we're getting close to crunch time. They want to get home and buy their Christmas presents, and heaven knows going off and buying a bottle of scotch is much more important than getting the nation's business done. The basic gist of the argument between the two is the Republicans want to have liability protection from businesses that open up and somebody might actually catch the bug. Democrats want a pile of government relief money in for local and state governments. The Republicans are saying heck no to the local government relief. The Democrats are saying heck no to liability reform because, well, we like suing people. Either way, both have an element of right and an element of wrong to them, and they just it's gotten to a litmus test thing. And the point is, at this point in time, anything would be better than nothing, right?
Well, I think that's definitely what the traders believe, is that if we get something through, it's going to be a benefit to the economy and to the markets. And so, but they can't seem to be able to get that pulled off. And so, I think that my opinion, at least what I'm seeing right now, is I don't know that we're going to get any kind of stimulus or relief bill passed before Christmas.
And that's the biggest fear in the process, and it's putting the market in a funk during a time frame where actually the news that's coming out is relatively good. Expectation is the FDA could actually issue the emergency authorization for the Pfizer vaccine to be distributed as early as today. And that would mean with pre-placed doses all over the country, we could start immunizing our healthcare workers at the very least in the first wave as soon as this afternoon if that permission comes through. That's good news. Economically, we got the producer price index report in. Inflation is of no concern whatsoever. 0.1% increase last month in both the core and the full number. That works out to a rock-crushing 0.8% inflation. Yeah, I've never been a big fan of spending money like a drunken sailor, but the risk is always inflation, and it sure doesn't look like it's there, right?
No, at least not right now, and that's going to be concerning, I think, probably to the Fed. And so, their new definition of inflation, I'm just not real thrilled about, but because it could mean that inflation, we could have a year of inflation up 4 or 5% with the lack of inflation we've had the last couple of years to get to their average of 2%.
Heck, with the last 2 years, we could have a 10% year next year and barely make the 2% number.
Yeah, exactly. So
very thought on its face, isn't it? The other thing getting into the thing is we've got the European trading partners. The Brexit negotiations are just not going well. Great Britain, Germany, and France are very close to acting like Trump and Pelosi at the conference table. They aren't getting along well, and that's got British markets in a little bit of a tizzy. And because they're big trading partners of ours, it's not necessarily affecting us as much as it would absent the problems with COVID-19, but still, it's an improvement in that situation would give us a boost. That would be one way of putting it.
Yeah, I saw the headline was, hey, Brexit, Europe and the UK finally can agree on one thing. They don't agree.
I was going to say the one thing they can agree on is they don't like each other. These guys were throwing rocks at each other across the British Channel 1,000 years ago, and now they actually have to talk money. It just it doesn't work real good, does it?
No, definitely not, and that'll be another bone of contention for a while, I'm afraid.
Understood. Hey, I got one thing just came across my ticker that we didn't talk about before we got on the air. AMC Entertainment, the big movie theater chain, they have secured $100 million in debt financing out of a big capital company. That would at least indicate that the chain will survive, and they've been making threats about basically going under completely.
Yeah, and that's probably good news for them. I mean, they just need to hang on a little bit longer, I think, once this vaccine gets out there. People are going to want to go to the big screens again. I mean, I know that being home and streaming and that kind of stuff is nice, but there's something about the big screen that brings stuff more to life. And so there's still that avenue once this thing gets taken care of. I think that you'll see more people head out to the movies.
And it's a function of confidence more than anything else that we've got to get going. And, the vaccine will end up giving us that sense of confidence that probably we're a little bit safer there. There's some really good flicks that have come out, and the theater companies are doing a good job putting classics like Elf and whatnot, some Christmas classics up on the big screen. There's a reason to go if we can just feel comfortable about going.
Yeah, that's true. So it's just going to take time to get that rolled back up there.
Understood. Have we got some company tidbits to get us going this morning and maybe give some energy to the stock market, or are we so far to the end of earnings season we don't even have those to help?
No, well, I don't know how much they're going to help today, Dave, but we got a handful that came out. We got Lululemon that came out, and they earned $1.16 a share, which is really good. They were only expected to come in at about 88 cents a share. So, and the revenue was well above expectations also. They even came out and raised their holiday this quarter, their revenue and profit outlook. So that makes me 0.1%. I'm here. You there?
We lost you for a second there.
So they're down 1.2% this morning, and I don't understand why, other than they're really butting their heads up. They're within 10% of their 52-week high, so that may be just some profit taking coming off this morning on good news.
Especially off a good quarterly report, that would make some sense to take a little profit off the table while you got a chance.
That's right, especially in retail. The other one I have is Costco. They came in, they beat estimates by 24 cents a share, came in at $2.29. Their forecasted revenue also exceeded Wall Street expectations. Their same store sales were up a little over 15.4%. So they had some good news. and they are trading up about 0.5%. But I guess given that everything else is red this morning, that's putting pressure across the board for these guys. The other one I have is Oracle, and that's an old line company. It's been around forever.
It's funny. It's only about 25 years old, but in the technology business, that makes it a dinosaur, doesn't it?
Yeah, it really does. And they keep trying to reinvent themselves, and they've gone into some cloud-related offerings and stuff like that, which has been good for them. They did beat by 6 cents a share, came in at $1.06. Revenue was basically in line with what was expected. So again, remote working has helped them. They're trading up 1.4%. They're probably one of our bigger winners today. Let's talk about a big loser in terms of market anyway. Broadcom. They beat by 10 cents a share, which is next to nothing. Again, I mean, they earned $6.35. So 10 cents isn't a whole lot. And so and revenue was a little bit above expectations, but they're getting beat up pretty bad. They're down almost 1.5% this morning.
Weird. I'm seeing a lot of technology stocks that are not doing well on the loser list this morning. I think we might have a little bit of profit taking, even off of relative beats and close twos on the report so far.
Yeah, I mean, the NASDAQ's getting beat up pretty big this morning because of that. The last one I have for you today is Vail Resorts, the ski operator. They lost 22 cents more than expected. And they came in at, they lost $3.82 a share. Revenue was less than expected. Obviously they've been impacted because of limitations that they can have on the slopes and being closed at certain times. They're hoping the quarter is going to be better for them once the vaccine hits, but they're trading down today 2.2%.
And they're praying for snow to boot out in Vail. It used to be one of my favorite places to go when I lived out in that neck of the woods. Setting the table for the morning, mixed bag yesterday. NASDAQ was up, but everything else was off just fractionally. I'm not sure I like the shade of red I'm seeing this morning on my delayed quotes. Anyway, Phillip, where are we going 45 minutes early?
Dave, it's not any better on the actual quotes. We've got the S&P 500 down about 0.6%. The S&P 500 is down 0.75%, and the NASDAQ's down almost 0.7%. So everything's a pretty good shade of red today. Silver is basically.
Try it again, Phillip. We lost you for a second. Are you there?
Gold. I'm here. You there?
Yep. Now I got you. Back again.
So the internet, you gotta love it. Silver's flat. Gold is up 0.33%, and crude oil is basically flat. Is at $46.73 a barrel right now.
Yeah, we'll take that for the moment. Mixed bag on Asian rim markets over the evening hours. When they closed this morning, Japan was up. Hong Kong, the Chinese markets up by a little bit. I'm sorry, Japan was off by a bit. About what you expected based upon what we were talking about Brexit. Great Britain's markets are off by well over 0.5%. German markets are going, oh no, they're down by 1.5% halfway through their trading day. It's a weird time, Phillip. What should be going up is going down, and sometimes on days we start this thing out, what should be going down, it's going up. That's volatility, and it's really scary when it's in my retirement fund. How do I find you to keep it out?
You're absolutely right, Dave. And volatility is the one thing that folks can control. And you need to know what your risk number is from 1 to 100. If you don't, please give us a call, 863-382-0037, and walk through our financial x-ray report to help you out there. And then catch our website, statlerfinancial.com, and then join us this weekend. I know we're not going to be on at noon, but we'll be on at 6 a.m. for you early risers on Saturday and 10 a.m. Sunday morning on Highlands News Talk, 7:30.
And like we said yesterday, it's the Knowles and the Gators on Saturday noon, so this is one of those rare times you don't mind taking a pass, right?
Well, that's right. I'll be sitting in front of the TV.
All righty. Phillip, thank you much. You have a dynamite weekend, and I'll see you Monday morning. Fair enough?
All right, man. Take care.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, thanks for joining us on this Friday. Hope that you have a great day, a great weekend, and I look forward to joining you again on Monday.